The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, 10 a.m. Eastern Time, 30 minutes into the trading day, and quite the acceleration we have going on this week so far, folks. Extending the gains from the past couple of days. We got the S&Ps right now positive by 35 points. You're talking about 0.9% in the green. You get the NASDAQ 100 up 1.8%. Tech stocks continuing to accelerate higher, sitting just under 13,000. You have the Dow making all-time highs this morning, 32,472 right now, up 0.6%. You got the Russell making all-time highs as well, up about 1.5%, trading at 2318. This on the heels of the $1.9 trillion stimulus deal getting passed by Congress. That goes to President Biden's desk. He's expected to sign that ASAP. He will be making his first primetime address tonight, being the cheerleader out for a post-COVID reality, what that means, and the stimulus and how that plays into things. Jumping around to what else we have. How about Bitcoin? 57,815 yesterday, right near that level today, 57,640 currently, up $1,000 on the session. Crude continuing to trade higher, up by almost $1 right now at 65.25. Gold had caught a bid early this morning, gave back most of that gain though, was up at 17.38. You're sitting flat right now in gold at 17.21, and we got to jump to notes and bonds. Notes and bonds accelerate. We got the 10-year actually with a 133 print early in the day. And guess what? Just like that, we're getting some lower price and higher yield resuming. We got the 10-year right now. We'll call it flat. It's down one tick at 132.16. But we just gave about half a point from where we were trading at about 4 a.m. this morning with a 133 handle in the 10-year. We're now trading at 132.16. You got the 30-year down 14 ticks at 157.23. You're down more than a full point from where you were this morning with a high print of 158.27, and we'll pull up the VIX as this market just does not stop to the upside. I mean, look at this chart. You back it up to last Thursday, and we had a 31.90 print in the VIX. You back it up last Friday, we had a 30.03 high print in the VIX. Since then, we're now dealing with a 21.84 volatility index premium getting sucked out of this market as the indices continue to accelerate higher. You want to talk about premium, folks? You want to talk about volatility? Right after this program, every trading day, Fast Market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down the markets, breaking down hypothetical trades, talking trades in a hypothetical manner, managing their option portfolio. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. How are you?
I'm doing great, man. I'm doing great.
It's a pretty interesting market we got going on here, Tommy. Yesterday, if you traded the NASDAQ yesterday, right, that market made a tie right after the opening and spent the rest of the day basically under pressure, right? So now it's hit, 13,000 already this morning, and it's softened below that. But, you're still talking about a NASDAQ now up almost 2%, coming out of its winter slumber a little bit to regain its leadership here. But you're talking about, again, kind of what I said Monday, Tommy, which is this market, you're looking at some of these stocks, like Apple. Apple's $122. It's got a little room here. This market, especially the NASDAQ, you're talking about a lot of indices making new highs. Not the NASDAQ. They're not even close to a new high. So in terms of the NASDAQ outperforming, this could go on for a little while because why? Because people are getting comfortable with a 10-year that got up to 1.6, drifting back towards 1.5, and people are realizing that stocks are still probably the place to be if the 10-year stops or plateaus around here, Tommy.
It is pretty cool, Kevin, when you take a look at some of these equities in particular, right? We'll start with Apple. You traded in 121.92 yesterday. I mean, you got down to 116 for the recent low in the last few days. That brought us all the way back to August prices, Kevin, right? Talk about a consolidation of a pullback. We're a solid $24 right now off of the highs. But, I talked about it on my program, and I couldn't agree more. Amazon, same deal, man. You've been in a consolidation on Amazon back to almost the beginning of July, which is when Amazon climbed above $3,000. You've now been chopping around between about $3,000 and call it maybe $3,400. The high print of $3,552. No reason why. I'm bringing a little bit of technicals, my own bias into this, but no reason why. You have a consolidation. Some of these bigger tech stocks, right, really accelerated dramatically early in the COVID days from the lows of March to the highs of maybe, August, September, July when you made that run. And we've been consolidating, man. You saw the NASDAQ pull back, but we just had, Amazon, I talked about, we were down to a 2,800 handle on Amazon. And just like that, we're back above 3,100. Still, though, like you mentioned, $450 from the high in a company like Amazon, strength across the board coming out of COVID. I'm sure they're going to be successful in the future in some way or another. So, Kevin, we still have earnings going on. I know we got DocuSign after the bell tonight. We had Oracle last night. They got some big action, man, moving down 8.7%. But what are you guys going to be talking about? We had weekly jobless claims today, right? We had the ECB talking about. There's so many variables in this market combining to what we have going on right now.
Right. Like Folio will do a presentation on Ulta. And then in the last segment of the show, we will look at earnings on DocuSign. But in the first segment of the show, we're going to do something a little different, and we're going to look at the SPX, just options on the S&P 500 and how they trade and how you can take advantage of trading something bigger, right? Not an individual name, but an indice. So, the learning curve continues for our viewers as we look at not only names with coming out with earnings, but indices as well.
Can I ask you, Kevin, because I think about this myself, wasn't even ready for that question, but just something that comes to mind. When you talk about the S&P, right, you could trade, of course, SPY options off the SPY, the ETF, or they do have futures options as well, right? How do you look at that, something yourself? I've thought about this myself. Is there a difference there you look at when you're looking at maybe trading a futures option versus one of the ETFs, for instance? If it was the NASDAQ, you could look at the Qs, right? How do you look at that?
Well, let's start with the SPX, right? That is a derived average. It doesn't trade an underlying on the SPX, but it does trade a future linked to it, which is the E-mini, the /ES. That's trading 39.31. The SPX is trading 39.33. There's obviously some premium and some divergence and convergence that constantly keeps that future and indice in line, right? But then there's the SPY. Then there's the ETF. That trades differently, right? There's no underlying for the SPX. There's futures, but no underlying. The SPY, that is a smaller size contract for the S&P 500. That's an ETF that you can actually buy an underlying for and trade it more like a stock. But all these, everything that I just mentioned, has options that trade on it. The SPX, the E-mini, and the SPY. They all have options that you can trade on these, and they're all pretty liquid, especially the SPY is extremely liquid.
It is pretty cool, some of those SPY option trades. They're trading almost like an equity, the options, where it's penny wide, 2 penny wide. You're building some multi-leg options. I've looked at it. Listen, we look forward to the education. We look forward to the program at 11 o'clock, man. And you have yourself a great weekend, Kevin.
Thanks for having me on, Tommy.
Thanks, Kevin. Stay tuned, folks. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. I got a chart of the ES up here right now. S&P futures, as we were talking about with our man Kevin Hinks, up about 25 points or 0.6%. I'm going to jump to the SPY real quick. Pretty similar, of course, up about 0.6%. The SPY trading at 392.16. And just to Kevin's point, if you haven't taken a look at SPY options, I'm going to be listening to the program Fast Market right after this show every day, 11 a.m. Eastern time. Sometimes when you're trading options, folks, especially in illiquid option markets, right? First, you have the equity, of course. You got to have a liquid equity. Then if you really want a liquid option market, you really got to have a very liquid equity to then drive enough volume into the options market, because you have so many different price points that you need active buyers and sellers within in order to bring that bid-ask spread down dramatically. Now, the SPY is one of the best examples of it. I'm sure the Qs are pretty close to in terms of the market you have, but I have the March 19th option expirations, okay? So we're looking at a SPY trading at 392 for the month of March, the March options, okay, the monthly options, which expire in 8 days, all right? That is next Friday. So you're talking about a week from tomorrow, these expire. Pricing in about a $10 move in either direction. Okay, if you're buying an at-the-money put or call, you're paying almost $5 or 5 points, however you want to refer to it, for this ETF. We're trading at 392. What I did want to talk about, though, is look at the bid-ask spreads even as you go out, maybe 10. I mean, you go to the 381 put, it's a penny wide bid-ask spread, maybe 2 pennies here and there. All right, you go maybe all the way up to a 405. You do stretch things a bit, you start getting to a 10 cent. The further you go away from the market, the less liquid it will be. It's going to make sense, right? At the money, you're ticking at about a penny wide to 2 pennies wide. Okay, because it's just such a liquid market. The great thing about this is when you're building multi-leg trades, multi-leg option trades, very, very liquid. You're able to get executed almost instantly at a middle of a market, and you're not paying a hefty bid-ask spread. Because sometimes, folks, if you're making 2-leg trades, especially if you're trying to make a 4-legged options trade like an iron condor, and you're doing it in an options market for an equity or even an ETF, but an equity that has wide bid-ask spreads, it's going to be very difficult to get executed at the middle of that market or at a fair price just because there's not enough volume. It's not a liquid enough market for there to be enough supply and demand for you to get a fair execution on a reliable basis. But the SPYs, yeah, talk about liquid, folks. Very, very liquid. I'll look forward to Kevin's conversation that they'll be having at 11 o'clock on Fast Market. Just wanted to touch on that because if you haven't taking a look at this market, could be a great way with a little bit of a defined risk, depending on which way you're going in the market. All right, we could be in a consolidation. We could be in for a big rebound here. But you have the markets. We'll jump back to the ES futures pushing right up against all-time highs. Now, I stress that because you get into the jobless numbers. Folks, we are still at record numbers outside of this past year, as in the record coming into COVID, okay, for a weekly jobless claims number on an initial basis, which is what we got at 8:30, was something like 692,000. I think it was from somewhere in the 1980s. Never before we had over 700,000 people filing for an initial jobless claim on a weekly basis prior to COVID. We've been stuck at that level for almost a year. Maybe it is a full year right now. We're coming into literally the year anniversary. In Florida, now differing states differed. New York, Massachusetts, New England hit hardest early on. They had some shutdowns earlier. Florida shut down about March 16th, 17th, 15th. That's when schools shut down. It was kind of a big shutdown. The whole country started to shut down right at that period of time. Point being, you're sitting at all-time highs, basically, we'll call it in the S&Ps. You're making literal all-time highs in the Dow today and the Russell, and you got the NASDAQ. I mean, yeah, we pulled back, but all things considered, folks, we're still sitting basically at 100%, a double banger from the lows we had in March at a time when we need to make up those jobs. You might see some volatility coming in a big way in these markets. Now, we got a record stimulus deal to get us over the hump. But there's going to be expectations. I keep saying it on every program, folks. There's going to be a lot of expectations for this market to come roaring back. We got about 10 million jobs to make up from where we were prior to COVID. Non-farm payrolls was just out last Friday. Okay, we're currently sitting at about 143 million employed. The number prior to COVID was 153 million. Many of those people leaving the workforce during COVID, maybe they had the ability not to be working during this time of exceptional uncertainty. Once we get over that hump in terms of the vaccines, which seem to be going well, pointing to a good direction of ramping up the vaccines. We're seeing states now decreasing the age, whether it's from 60 to 55. You have Alaska opening things up to everybody 16 or older. The next conversation, folks, coming in the next 2 to 4 weeks, okay, is going to shift from a supply constraint, which is what's been the focus, rightfully so, over the last couple of months, to a focus on those who are purposely not willing to get the vaccine. That is going to be the shift. Hopefully we overcome that obstacle, folks, because if you're out there, these vaccines, they're effective, they're safe. Please consider getting one, all right, whether it's for yourself or the people that you're going to be around. Okay, if you don't want to get one, that's your own choice. You can suffer the consequences of your own choice. But the thing that I struggle with, folks, is that people who don't want to get the vaccine and then they want to go around people who have no choice to be vaccinated, whether it's because of a weakened immune system on their own, whether it's just because maybe their children, maybe grandparents out there aren't going to get vaccinated and they have children that they want to visit that don't have the option to get vaccinated. It's a tough deal when you're making the choices for those people, putting them at risk because of your own choices. It's a safe deal, folks. The science shows it beyond a reasonable doubt in a dramatic fashion, and that's what we need to get over this. You're going to see that shift. That's why you're going to see states open up dramatically, because there's going to be a drawback, unfortunately, of those members of society who are choosing not to do it. Hopefully there's enough that do, that we reach that level where we get rid of COVID. We're almost there, folks. We are almost there, but it's still persisting. So stay strong, social distance, wear a mask, get vaccinated when you can, and we'll get over this hump. All right, back to the numbers of the jobless claims. So the lowest number since November, encouraging, but as I mentioned, we're still sitting at above 700,000. That's on a weekly basis. We're going to see some numbers in March, April, potentially May, where you're talking about that we need to add millions of jobs to get above the number that we were at prior. Now, you look at the weekly jobless claims, definitely a declining trend, right? In terms of, that's continuing, but the weekly jobless claims at 712,000. We've kind of been stuck here, folks, though, since about September, right? Astronomical levels at the beginning of the shutdown in terms of almost 7 million, above 6 million the second week. We've trailed off, continuing claims, dipping as well, but that's incorporating people who are expiring off of the state rolls. When you actually look at the number of citizens in America that are receiving some type of government assistance, whether they're rolling onto the economic emergency economic assistance program for some of those stimulus deals, talking about almost 20 million people, folks, still receiving some form of assistance. So look out for that volatility in the next few months. Stay tuned, folks. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P's up 38 points right now, trading at 39.34. I have to continue the conversation for a moment, folks, okay? Because we have people in the YouTube Tigers Den. You hear it often, okay? And they're saying, stop talking about the vaccine. It's a stock show. In what planet are we living that's saying the vaccine's safe and effective via science and it will help us get over this pandemic? Is that a controversial statement? Okay? It's not. It's based on ignorance, period. We are dealing with a level right now, okay? And this is what it's going to take to get society back in action, folks. I live in society. I'm a human being, okay? I want normal life to resume. People who are going to willfully choose not to get the vaccine are going to hold us back. They're going to allow mutations of this virus to take hold, putting us all at risk because they don't trust science. We're at a level of 95.7 million doses of the vaccine have been given to Americans. 100 million vaccine doses given to Americans, okay? And where's the science that's based on they don't want to hear the science of things because they want to live in ignorance and put everybody else at risk, okay? No patience for that whatsoever. I don't know how this became something that is a politicized statement, okay? But these variations of the virus will persist when people choose not to get vaccinated and put themselves at risk, therefore putting us all at risk. There is nothing controversial about a vaccine. Now, people always said in the beginning, maybe it's an area of, oh, well, they only did a test on 10 to 20 to 30 to 40,000 people. We are at 100 million Americans have received the vaccine. It is safe. It is effective. It is what will get us over this vaccine. Okay? Period. End of sentence. There's no basis of a reasonable argument on the other side. The ignorance persists. We all know it, folks. It's just based on proud ignorance. And it's a very, very unfortunate factor that's driven us further into pain than we needed to go during this pandemic. So call it out like you see it so we all get over this. You shouldn't be afraid to tell people the reality we live in. I am certainly not. All right. Back to the markets. Let's jump into some of the stocks we got moving this morning. Oracle shares. Talk about an acceleration to lower prices, folks. ORCL right now. Oracle trading down to the tune of 7.9% today. Okay, you jump back to where we were. Cloud is the key, folks. Oracle, they beat by a quarterly number of 116 a share, 5 cents above estimates. The revenue slightly above as well. However, revenue in Oracle's cloud division fell short of projections. Cloud, folks. Cloud is the future, all right? You got CRM, okay? You have whether it's Amazon and their cloud, AWS. You have Microsoft with their Azure cloud. These companies growing dramatically, okay? And a lot of the multiples that are priced into a lot of these equities in the cloud are the reason why they're priced so high. Oracle falling short to that level. They do increase their dividend. The last thing the market cares about is if you're increasing a dividend at the same time that you are dropping your growth in the cloud sector. You have Oracle shares paying the price this morning. They're down 8% from a level about 72 and change to 66.39 this morning. Bumble. So the dating service Bumble. This is an interesting one. First time they're coming out with their earnings. They beat revenue estimates in the first quarter. The dating service company said it expects pent-up demand from people who had been reluctant to date during the pandemic. Now, I am not single anymore. I'm engaged, got a beautiful son. I did years back. I was on Bumble. Interesting service for those not familiar with how it works. The way that it goes is that you can swipe and then you make a connection, just kind of like, what was the other one out there that was huge? Tinder, right? Was the first one. You swipe, you make a connection. What Bumble did is they made sure that women were able to make the first connection. Talk about $1 billion idea. All you do is you say, you know what, ladies? I know that guys are out there on dating services. You may not want them to be hounding you, contacting you. We're going to give you the control to make the first contact once you've made a match. Women somewhat more comfortable, it seems, with that scenario. They make the first reach out to somebody that they might be interested in getting to know. It's a pretty cool service, folks. I used it myself, and you're seeing that they're beating already today. BMBL is their service. Check out the acceleration, up 14% from $62. You back this up. That's a minute chart. The daily, we were as high as 84.80. You were down to 57.30. Keep this one on your radar, folks, all right? Because you tie in the fundamentals of things into a company. Looking at the Analyze tab, we're talking about right now an $8.2 billion company. But I imagine there is pent-up demand because very difficult to be meeting a number of people if you are single in that dating world. We all can't wait to get back to normal, folks. It's a huge deal. And I imagine you're going to see some of these companies benefit as we're looking to be as social as we possibly can over the next few months and we get over this COVID pandemic. Cloudera, speaking of cloud, beating estimates by 4 cents with adjusted earnings of 15 cents a share, revenue above as well. Here's the disclaimer. However, weaker guidance than expected. As you may anticipate, trading lower. It's not what have you done for me lately. It's what are you going to do for me in the future? And Cloudera, almost halving the price that they're at. From $19.35, you're down 14%. A lot of these companies, folks, not only is it going to be some weak guidance, it's going to be uncertain guidance. Okay, so Cloudera gave weaker than expected forecasts for both profit and revenue. A lot of these companies are struggling in terms of where you price your expectations for the next year. You saw certain companies pulling their guidance completely, whether it was a company like Stitch Fix earlier in the week, right? They're down. They're up 5% today, but they've gotten clobbered from 113 to 51. You were trading at 70 coming into their earnings. You're now back to basically where we were in December. I'd be surprised if this thing doesn't fill the entire gap, down to 35. Stitch Fix, for a quick summation of them, they do $500 million on a quarterly basis. Talk about a gangbuster number. The average revenue per user, though, for those 90 days, you're talking about $400 and something, $450 or $470. You're talking very high end. Anybody who was spending almost $500 over a 3-month period during a pandemic when we're not being as social, we're maybe not traveling as much, we're not in the office as much, you're dealing with very, very high-end users. And you had a valuation of above $10 billion. Okay, when you were at these levels. What did they say? They said, we are providing no guidance for the next quarter and for the next year going forward, because even they are not sure what their business is going to look like when we're not online as much, we're not in the office as much, and how that changes things over the period of the last year. The market hates that stuff. Keep it on your radar, whether we come into the next earnings season. Very difficult for a lot of these companies to kind of predict their guidance like they normally would when we're dealing with so much uncertainty in the market as to how our current trends of how we've been behaving as consumers, how those trends may differ as we come out of COVID, and what trends stay with us that we've adopted during the last 12 months, and which trends dramatically change. Is Stitch Fix going to be able to benefit at a time when we all go back to work? If you weren't able to benefit at a time when we weren't shopping in stores, right? I mean, it's a catch-22 with this company, as in it's great we're all going back to work, but in the same time, we're also going to want to be going back to stores. I'm not sure people are going to be signing up for online delivery of clothing at a time when we're just dying to get around people and social and functions and all the above. All right, folks, we got the markets in positive territory. We got the Dow up here at a record of 32,511. The Russell sitting at a record as well, 2325. Stay tuned, folks. We'll be right back after the break.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got a chart of IBM up here. So we got a question from our man Baseball in the YouTube Tigers Den talking about IBM, taking a look at it maybe in a monthly, going back 10 to 15 years. So interesting. I already had this channel up here on IBM, just in the stocks I'm looking at and what's going on. It's a tough channel right now. Now, it's a wide channel when you look at the consolidation that we have had in terms of where you bounce around. We're right in the middle of this channel, sitting at 128. IBM's up today about 0.2%. Depending on how you're looking at this stock, this could be bumping up towards the next upper boundary. And if you just even rise to the upper boundary of this channel line, you're talking about 145 maybe. You could reach on that level. That's a solid almost 15% from the price we're trading at right now. You climb up to that level, but I would look, if you're looking for a longer term investment in this equity, put this channel line, put the channel lines on there. And again, technical analysis, it is an art, not a science. Where you put this bottom channel line on here, that would be your guess as well as mine, okay? But using a little bit of linear regression, just an eyeballing of it, maybe you take out those two that you dip below it briefly, and that is correlating back to basically the January of 2016. But you can see on a monthly basis, the trend is not your friend in IBM right now. Be critical to see how this reacts if we do climb back above that level. It's pretty correlated, folks, in terms of the high that it made going back to February prior to COVID. Okay, we were sitting right where you would be drawing a trend line from going back to February of 2013, matching up to the highs we had in March of 2017. We touched that level in February before we fall out of bed on COVID. We're sitting right now at about 128.46. And putting things on a little bit shorter time frame, we've got quite a little consolidation going here, right? I mean, I would look, it's going to have to get above this 135.88. We've had a few different highs that have correlated in this equity, IBM, across the board right now. You're sitting though 135, whether you climb up to that level. I mean, the high that we had, when you look at where we were, we dropped out of bed on their last earnings. We've clawed almost all of it back, but that's going to be a resistance area as well. So put both those on your radar if you're trading that thing. All right, what else we got going on? I wanted to talk about Boeing. Speaking of a stock that may be clawing out of some losses here, Boeing. So they're close to finalizing a multi-billion-dollar order for its 737 MAX from Southwest. You can see things really getting back to a normalcy here. Now, Boeing, been quite a pop over the last few days, right? Check out this bad boy. We were just trading, and that is on Tuesday. Yeah, Tuesday. We were just trading at a price point of $222. You're up more than $30 since then, with Boeing climbing to $253.93. We put this thing on a 3-year weekly. You can see we're getting back. I mean, prior to COVID, you had a price point of $302 in January of 20 on Boeing shares. We're now anywhere above where we were during the pandemic. You're back to basically early March prices on Boeing. And we were at a price point of Boeing of $446 before they started dealing with the woes of the 737 MAX. We were at a price point of about $350 before you started dealing with the pandemic woes. Boeing climbing back up to those levels. You could see the run. Eventually, Boeing's going to get back to that level. If you got enough long-term prospectus in your portfolio, you want to get some Boeing, probably still not too late, as there's no reason why Boeing can't climb back up to the 350 or 450 level. The one warning that I put onto that, right? You look at the domestic airlines like Southwest, who's coming after a new order for some 737 MAX planes. You got Southwest sitting actually above where we were prior to COVID. The highs of 2020, 58.83. We're trading at 59.05. Domestic travel, the point here, coming back to business as normal. You got JetBlue also right up to where we were prior to COVID. You jump around to the airlines with more international exposure, though. American, not quite there. Down from 30, still sitting at 22. Delta, one of the strongest airlines out there, but still trading from 60 to 48. Point being, Boeing still not going to be there potentially probably until 2022, maybe the latter half of 2022, when their international travel picks up basically to full steam. That'll be maybe when you see Boeing really start rocking at those levels to 350, et cetera. The one risk you have as well, though, the market has very little patience for any type of crashes, as they should with Boeing's history right now. So you're risking kind of a drop in a substantial manner if there are any more problems with the 737 MAX. I hope and I imagine that they're doing everything they can to make that the safest plane in the whole world, with the risk that they know they face if they have any more problems. But it doesn't mean they're out of the woods, folks. It's a risk. It's a very difficult risk to quantify when you have kind of an outlier risk, right? That maybe, we just saw the Boeing plane, I believe it was, with the engine failure problems, okay? Now, that wasn't maybe their fault, but you see the volatility that they may face if they have, unfortunately, disasters on the horizon. And unfortunately, if you're in the airline business, we've seen it. They've had problems. The 737 MAX just getting back into things doesn't mean in the long run, as an investment, it could be a profitable one. But they got some ways to go until international travel really resumes at anywhere near pre-COVID levels. All right, what else we got going on in the markets in terms of stocks with moving action? Party City, not exactly what you'd expect. How about 10% they're down pre-market? We'll pull it up, but they were out their earnings, 25 cents a share that they missing forecast by 6 cents, okay? Revenue matching forecast, same-store sales declining 5.9%, slightly larger than the 5.2. The interesting part here is Party City, very tough to do business during the pandemic. Look at this chart, folks. You dropped to 26 cents. We're back to 7.05. Probably looked like they were going out of business there for a while. You're back to 7.05. You're back well above where you were prior to COVID. You're down 8.38% today. They probably couldn't be more perfectly positioned for a post-COVID world, though. Think of the amount of parties that people are going to be throwing every weekend. Please, all my friends, throw a party every weekend. But the stock pulling back today, quite the acceleration from the lows they had at 26 cents. All right, let's take a look at gold. So we had some action earlier today. We had the ECB out with their decision, causing a little bit of volatility across the board, whether it was to bonds, whether it was to the dollar. You had gold. Gold spikes to 1738 overnight. At about 8:30 this morning, we start really a pullback from 1735 down to a low of 17.7. We've bounced a bit. Gold, you put it on the daily, quite the pullback we've had from 1450. And let me just pull up a Fibonacci number for some quick reference. I mean, you're talking about quite a pullback, folks. The whole run we had, you're bouncing right at around that 618 retracement. Always nice to see. You get below that, there's no reason why this thing doesn't jump right to 1450. If you're in gold, I'd look for it to hold, whether it's 1700. The other critical part of gold here, this 1700 level also correlates to the entire consolidation you had from April leading through almost the month of June. So you had a 3-month consolidation in the beginning of COVID. You accelerate to almost 2100. We've now pulled back a 618 retracement. You can see how often that 1700 or just beneath that level turned into support early in the year of 2020. We bounce off that level here. Look for gold to hold that level if you are a gold bull. Hey, not a bad market to be in. We might have some inflation. Stay tuned, folks. We'll be right back after the break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're getting another leg up in this market right now. You get the Dow up 310 points right now. Check out the Dow. I got a kind of a trend line here. Critical level. You're bumping up against kind of the upper boundary line of quite a trend that we've been happening in the Dow. 32,586 right now. Be interesting to see how this holds, whether this trend line will be a little bit of a resistance for the Dow. and it may jump around a bit. We will see. You got the S&Ps right now within about 17 points of all-time highs. And real quick, folks, starting next Monday, okay? Starting Monday, we're talking about this coming Monday. We got a little bit of a schedule change going on. I'm going to be kicking things off at 9 o'clock in the morning with the morning market kickoff. We're going to have a treat. We're going to have our man Basil Chapman jumping into the 10 o'clock slot with his Tiger Technicians Hour. Fast Market coming to you at 11 o'clock. And then Larry Pesavento, he's going to be moving to the noon time slot, and that will be going forward. So, again, I'll be doing my program at 9 o'clock starting Monday. We'll have Basil Chapman, Tiger Technicians Hour, 10 to 11, Fast Market at 11, and we have Larry Pesavento hosting Trade What You See every market day at noon Eastern Time. That all kicks off on Monday, so if you tune into those programs, check it out. They'll all be archived as usual. Head on over to our YouTube page, like our page on YouTube. You get all the notifications for the archives there as well. We're still going to be rocking, folks, every trading day from 9 a.m. till 4 p.m. Eastern Time, and the afternoon schedule staying as is. We got our man Steve Rhodes at 1, Dave White at 2, Tom O'Brien, my dad, live at 3, kicking off on Monday. Gotta love it. This market, folks, talk about gotta love it. We got the NQs above 13,000. We got the Dow not stopping right now, and we got the S&Ps. Seems all about fitting. We might get an all-time high today, folks. We're right bumping up against those levels at 39.41 in the S&Ps. Stay tuned. We got Fast Market coming up next. Basil Chapman at noon. Steve Rhodes, Dave White, Tom O'Brien, all this afternoon. Thanks for tuning in, folks. Have a great Thursday.